Hello guys, hello and welcome to myfinancesteacher.org. And regardless of a really bad jobs report on Friday, stock markets are actually up quite considerably since Friday. So let's look at the stock market, S&P 500 specifically, and see what's my outlook going forward. During the several days of last week, S&P 500 has actually lost around 3 to 4% of its value. Given a reversal on Friday, as well as a good day on Monday for S&P 500, I think that there is a chance that S&P 500 last week went through a relatively shallow daily cycle low. Generally, these daily cycles last for 2 to 3 months. The current one has been going on for about 2.5 months. So we are due for some sort of a daily cycle low nowadays, and what we saw on Friday might have been that low. However, there is still a chance that S&P 500 might drop below the Friday low at about 2720. If we look at what's been happening to S&P 500 since about October last year, then this period between October and December one might call some sort of a volatile left shoulder. We have a head over here around Christmas time, and it would not be extraordinary to see the right shoulder to be relatively volatile as well, in which case, if we have a relatively extended daily cycle, it might still retest this lower range at about 2640. I think it is quite likely, although the probability is less than 50%. This, remember, is only my opinion, not an investment advice. I would say there is around 40% chance or so that S&P 500 retests somewhere around 2650, and there is about 60% chance that we have seen the daily cycle low on Friday, and S&P 500 is going to continue its intermediate cycle advance. One of the reasons why I think the advance is probably slightly more likely than a continued decline is this COT report. The commercials at the moment are net long, over 103,000 contracts, whereas the speculators are at the moment net short. And generally, the commercials are considered to be the smart money. And given that the commercials are net long, I think a scenario of continued advance towards 2900 is slightly more likely. Now, moving on from the short term into intermediate term, let's review these intermediate cycles. As you see on the chart, during 2016, 17, and 18, we had 1, 2, 3, 4, 5, 6 cycles. So on average, these intermediate cycles last for about half a year. The current intermediate cycle started in around Christmas time, so it's been going on for less than 3 months. Which means it's not really due for any sort of intermediate cycle decline. For that reason, I think that even if S&P 500 does retest 2640 over the next several days, in general over the next several weeks, I do expect it to retest probably 2900. That might be where this intermediate cycle is going to top and enter into a declining phase. Well, possibly retesting, say, 100-week moving average looks good enough. We'll have to cross that bridge when we're there. So that is my opinion. In the short term, there might be some volatility. So if you're entering some positions at the moment, I might advise stops at about 2720. But in the medium term, I think we might see S&P 500 close to 2900 sometime by end April, early May. And in the comments below, let me know, guys, if you agree with this intermediate outlook. If you disagree with that, do you think S&P 500 is going to be below 100-week moving average by April? I do enjoy reading those comments, since often I do learn from that as well. And lastly, good luck in your trades, although this is not an investment advice.